Good morning, and this is Monday the 30th of April and your regular daily update on Elliott wave patterns from Aiden. Before you begin and proceed any further, I would ask you to improve the quality of the videos on your YouTube to the highest available, which is 1080 pixels, which is high definition, and you will be able to see all the charts and markings in much greater detail. And we start with the French CAC, which has been my favorite index since the peaks in the middle of March. I did call for a bounce of about 5 to 6%, and from the April lows, which in fact is what we had a bounce of about 6.6% in the CAC. I believe that that particular bounce is done now, and we can see a very neat impulse unfold with waves 1, 2, 3, 4 and 5, which now need to correct. At the very least, this impulse itself needs to correct to roughly, I would imagine, minimum 31.18 and maximum, well, possibly almost to the new low of 30.63. After that, I will expect another push higher, possibly to 3,300, from where I expect quite substantial falls. Quite a lot depends on whether this decline from the March high is a whole finished impulse, or whether that's just waves 1, 2 and 3 into here as labeled. If it's the latter, then we're going to have a fourth wave correction, of which this is wave A, so A, B, C, wave 4, and just the marginal new low, followed by about a month of correction higher. If this is a whole impulse with waves 1, 2, 3 over here, 4 and 5, then we are building wave 2, of which we've done A, B, C can go quite high in that case, possibly even to 3,400, from where on we will see very rapid third wave declines. There is absolutely no way of telling which one it is right now, so I'm afraid it's a very much a shorter term hit and run trading strategy right now. From the CAC, I'd like to take us through to the AEX, which is the Dutch index, a very technical index, one of the favorite ones for me to analyze. It is clearer on the Dutch index that the decline from the March highs is so far a three-wave affair, with waves 1, 2, 3 into the April low, and possibly beginnings of wave 4 to date. It's also very clear that the rally is a five-wave move, which needs to correct at the very least to about 300, which is about 2.5% lower, and then we'll see another push higher to maybe 314 to complete wave 4, marginal new low in wave 5, and a month of correction higher. All of this is subject to change. It's entirely conceivable that the fall is a full five-wave affair with waves 1, 2, 3, 4, 5, and consequentially 1, 2, 3, 4, 5, so we're building a wave 2, which will terminate roughly at 315 to 320 in the beginning week of May. There is no way of telling whether we are doing that, the former or the latter, so again it's very much a hit and run trading strategy for the next couple of weeks. Big declines are ahead, we must be able to get on top of them. We now go to the DAX, which of course has been the stronger index, German economy being much stronger than everywhere else. For now, I firmly believe that Germany and the Dutch index will actually take the lead to the downside from the CAC and the Spanish and Italian indices, for reasons that I could explain in future videos. The DAX is clearly not a five-wave down affair. I mean, it could be, but it very unlikely is. And we have a five-wave rally here. We'll probably correct down to about 6,550 or 6,600, and then rally again, possibly as high as 7,000. It will be a very sharp rally at the beginning of next week, I expect. So this week we're going to have a kind of pithy decline into Thursday, Friday, possibly coinciding with the non-farm payrolls. We're going to rise quite high. Very interesting index is the MDAX, which is the German mid-caps. Extremely technical index, quite volatile, but extremely technical. You can see that the drop from the July 2011 high is a very clear five-wave affair. 1, 2, 3, 4 and a diagonal 5. Since then we've had an A, a B, and we're currently finishing a C wave. That it is finishing is without a doubt. That we're going to go lower, to my eyes, is also without a doubt, provided that levels at 11,300 hold. That is only about 4% higher from current levels, where your reward is a full 20 or more % decline. So excellent risk reward here, and very clean finishing impulse here from what was a fourth wave low in April. I believe that the German mid-caps will offer fantastic trading opportunities, perhaps not for percentage declines, but for the technicality of the move. And you can see that the trend lines are very, very, very well defined here. So that's the mid-caps. And finally, for the stock indices for today, I would like to cover the EEM, which is the Emerging Markets ETF. Its biggest weights are FXI, which is a Chinese market, EWZ for Brazil, and EURUS for Russia, basically, and some Korea, South Korea as well. Perfect 5-wave decline from last year's 2011 highs, and an equally perfect 3-wave correction high A, B, C. I did expect this C to take place. You can look at that in my updates from last year. This C is finishing in exactly the right place. There is a chance that what we had so far for the whole of March and so far all of April has in fact been a drawn out wave 4. That is either to do with this wave 2 here, or possibly even this wave 2 if we move the B to here. Since this did not make a new low, it's entirely possible this was the B wave. 1, 2, 3, we're now doing a fourth wave of a C, and we'll now move higher in the fifth wave of the C. I expect this to be quite dramatic. I expect there to be some sort of a European announcement or possibly a fantastic number in the US for the payroll growth, and we will see a rapid, perhaps 6 to 10% rally in emerging market stocks in a week. This will be quite a celebration in the markets and will form the peak over here. From then on, I expect declines that will match at least declines of 2011. So we're going to go definitely below 2011 lows of 34, and we will likely reach lows of about 25. If indeed we top at 45 or so, this will be a decline of about 40-45% through the May and summer of this year. Quite substantial declines there. Thank you very much. That's all for stock indices. More coming up today would be dollar Swiss, dollar Polish, and dollar Russian ruble, as well as Goldman Sachs and Morgan Stanley stocks.